Good morning, everyone, and you're very welcome to today's webinar. For those of you who have just logged on, we have already completed a sound test, and thanks to everyone who helped out with that. So first, I want to introduce ourselves. My name is Rachel Hines, and I'm the Marketing Manager here at Thesaurus Software. And also joined by me today is Karen Bennett, who is the Chief Commercial Officer at Thesaurus Software. 1 year after the introduction of the Temporary Wage Subsidy Scheme, the revenue reconciliation process is finally underway, and the deadline is fast approaching, with just 1 month left to complete the reconciliation process. Therefore, first up on the agenda today, we're going to look at the TWSS reconciliation process. After that, we're going to go through a quick recap of the EWSS and where we are now, and what could potentially happen from the end of June onwards. We'll also look at top tips for managing employees as lockdown ends and as you return to the workplace. And finally, at the end of the webinar, we will have a questions and answers section where we will answer any questions that you may have. For our questions and answers session, we will be joined by Paul Byrne, who is the Managing Director here at Thesaurus Software, Audrey Mooney, who is the Customer Support Manager, and Laura Murphy, who is our Chief HR Officer. If you have any questions, you can type them into the questions box on your control panel at the side of your screen, and we will try to get through as many questions as possible. Just to note, we have a lot of attendees logged on to today's webinar, so we won't have a chance to answer every single question. This webinar is being recorded, and all attendees will receive an email later today with a link to the recording of the webinar, so it's no problem if you do need to leave at any stage. Also in the email later today, there will be a copy of the presentation slides that we are using today, or you can also download the slides right now if you wish on the Handouts tab on your control panel. We will also include some useful documents and additional resources in the follow-up email later today. So now that all the housekeeping is out of the way, we may as well get straight into the webinar. And I'm going to pass you over to Karen to start off with the TWSS reconciliation.
Thanks, Rachel, and good morning, everyone. So just a little bit of background to start off with. The Temporary Wage Subsidy Scheme, also known as TWSS, was introduced in March of last year, enabling employers that were affected by the pandemic to receive a subsidy from the government in a bid to keep their employees on the payroll throughout the pandemic. The scheme was in operation from the 26th of March 2020 to the 31st of August 2020. And there were two parts to the scheme, the transitional phase and the operational phase. During the first 6 weeks of the scheme, known as the transitional phase, Revenue operated a simplified process so that employers could be supported as quickly as possible. Employers received a flat rate subsidy of €410 per week for each employee that they had made a PRSI Class J9 submission for, regardless of the amount of the subsidy actually paid to the employee. Now, in a lot of cases, this amount exceeded the subsidy that the employee was entitled to receive. This meant that there was an overpayment built into the transitional phase of the scheme. Employers were advised to hold the balance for a future refund back to revenue. During the operational phase, which began on the 4th of May, Revenue calculated the average net weekly pay and TWSS values for each employee based on employer payroll submissions. And Revenue provided employers with relevant employee information to use when calculating each employee's subsidy. This ensured the correct subsidy amount should have been paid to the employer for each employee in the operational phase. So what is the TWSS reconciliation? The reconciliation process is essentially Revenue's method of rectifying any overpayments made to employers throughout the duration of the scheme. Approximately 90% of the reconciliation balances directly relate to the transitional phase of the scheme, where employers were paid $410 per week for each eligible employee. At the time of joining the TWSS, employers made a declaration that they would repay any excess subsidy payments arising. Employers were also advised that a reconciliation of the subsidy payments made under the TWSS would take place after the scheme had finished. There are two stages to the TWSS reconciliation process. For stage one, employers were required to report the actual subsidy that they paid to employees on each pay date. And the deadline for submitting this through to Revenue was the 31st of October 2020. For stage two of the reconciliation process, Revenue compared the total subsidy amounts paid to the employees against the subsidy amounts paid to the employer. This enabled Revenue to determine the amount of TWSS owed back to Revenue from employers. Since the 22nd of March 2021, most employers can access their TWSS reconciliation balances in ROS. The reconciliation balance is based on the actual information provided to Revenue by the employer. Approximately 44% of employers who have availed of the TWSS do not have any balance to repay or are due further TWSS payments from Revenue, while 56 of such employers have a reconciliation balance to repay. Employers have until the end of June 2021 to accept the reconciliation calculation issued by Revenue, make corrections to payslips if necessary, or to make an inquiry through My Inquiries. Revenue are strongly recommending that employers take the time to read and understand the guidance before accepting the reconciliation amounts. Back to you, Rachel.
Thanks, Karen. So after you have received the ROS inbox notification telling you that your reconciliation information is available, you can access this in ROS under Employer Services. The reconciliation screen will reflect your current reconciliation position. The information shown will vary depending on the information that you have submitted and your balance. If you have reported the subsidy paid information on all J9 payslips, the reconciliation screens will show the summary information, allowing the employer to review and accept the reconciliation. However, if you have not yet reported the subsidy paid data for all J9 payslips, or if your reconciliation is not yet available, you will be given information on the actions that you need to take. If you have reported the subsidy paid information on all J9 payslips, then the reconciliation screens will show the summary information. So here is total TWSS amount paid to you by Revenue, total TWSS amount payable in respect of your employees, or essentially this is the total subsidy that you were entitled to receive as calculated by Revenue. Next is total TWSS paid by you to employees, and you can cross-reference this figure with the payroll software, which we will look at later. And finally, down the bottom here is TWSS owed to Revenue, or if there is TWSS owed to the employer, then this will be displayed in place of TWSS owed to Revenue. It's also important to be aware that the summary information does not include any TWSS repayments that you may have already repaid to revenue in relation to the TWSS. If the TWSS amount paid to you by revenue equals the total amount payable in respect of your employees, then this reconciliation is balanced. Also, revenue are not pursuing companies that owe a balance of under €500. So if the TWSS amount paid to you by revenue does not exceed the total TWSS amount payable in respect of your employees by more than €500, then revenue considers this reconciliation to be balanced, meaning no balance is payable. Further down the screen, you can also download the reconciliation detail CSV file, and this contains a complete record of all the TWSS related payroll information provided by the employer at payslip level, and also revenues reconciliation calculation. If you are satisfied with the information in the reconciliation result, you should accept the reconciliation. When you accept a reconciliation, revenue will combine the TWSS reconciliation result with any repayments that you have already made to revenue, and a statement of account will be sent to your Ross inbox the following day. If your reconciliation is balanced, by accepting the reconciliation, you will finalize your participation in TWSS. If an additional amount of TWSS is due to the employer, revenue will process this and the additional payment will be made to the nominated bank account of the employer. And it's also worth noting that this amount isn't automatically refunded. You do need to accept the reconciliation for revenue to refund the amount owed to you. If there's an amount owed back to revenue, the employer can pay the amount owed via RevPay on Ross, or alternatively, eligible employers can avail of debt warehousing. For employers already availing of debt warehousing, this liability will automatically be warehoused when they accept the reconciliation. If you think that the information you previously provided is incorrect and that the reconciliation balance is therefore incorrect, you should review the subsidy paid data previously submitted and make any corrections required. Where you do make corrections to the payroll, you won't need to upload the TWSS reconciliation CSV file to Ross again. These corrections will be reflected on the correction PSR that will be sent to revenue. And this will result in a revised reconciliation balance, which will immediately be available in Ross. And I'm going to pass you back to Karen again.
Thank you. So employers cannot accept their reconciliation until all subsidy data has been reported. Therefore, if you have not already done so, you must take action to submit the subsidy paid in respect of all J9 payslips, and you must also report any subsidy payment that was made on non-J9 payslips, regardless of the PRSI class. If you have not submitted the subsidy paid data in respect of either some or all J9 payslips, you will be asked to download the reconciliation detail CSV file and identify all active payslips that show an unreported subsidy paid and submit the missing subsidy paid information to revenue. You can see here that the total TWSS amount payable in respect of your employees is 0. And on the CSV file, it's also saying that the subsidy paid is unreported. So in this example of where no subsidy paid has been reported to revenue, and unless you amend this, revenue will recoup the full amount. To rectify this, you simply need to submit the subsidy paid report and the reconciliation summary, and the reconciliation detail CSV file will be adjusted in real time to reflect this. While the majority of employers will be able to access their TWSS reconciliation balance, Revenue are still calculating the reconciliation balance for a small number of employers, including employers that have raised issues with Revenue, which Revenue is processing. When this process is complete and the reconciliation is available, then the employer will receive a ROS inbox notification. It also includes employers that Revenue is currently engaging with and awaiting further information from before the reconciliation can be made available. These employers are encouraged to check their My Inquiries and provide such requested information. When an employer's reconciliation is not yet available, the reconciliation detail CSV file will include the information provided by the employer, but it will not include the reconciliation information until that employer's reconciliation is ready. When their reconciliation is available, the employer will receive a ROS inbox notification. By the 30th of June 2021, employers must have received their reconciliation information, made any necessary corrections, and have accepted their reconciliation. If no action is taken by the 30th of June, the reconciliation will be treated as final. If the subsidy paid information is not provided by the 30th of June 2021, then Revenue will take action to recover all TWSS payments made to the employer plus related interest charges. If an employer has reported all subsidy paid before the 30th of June, but has not accepted the result of the reconciliation, a notification will be issued for any amounts due to be repaid to Revenue per the reconciliation calculation, and normal collection and enforcement processes will begin. And finally, just a couple of stats in relation to the reconciliation, to the Revenue reconciliation. 67,000 employers have received TWSS subsidies from Revenue, but to date, just 28,000 employers have completed the reconciliation, so just 42%. We would strongly advise that employers check their reconciliation balances as soon as possible, so they have enough time to review the amounts and make any amendments if necessary before the 30th of June deadline. Back to you, Rachel.
So as I mentioned earlier, the total TWSS paid by you to employees should match the subsidy paid figure on your payroll software. And this should have been reported to Revenue using the TWSS CSV file. You can confirm this figure matches by running the report in the payroll software again. So looking here at Thesaurus Payroll Manager, to view this amount in the payroll software, go to Reports, followed by TWSS Report. And here we need to enter a date range. So I'll say the 1st of March 2020 to the 31st of August 2020 and click Prepare. So here you will see a list of all of the subsidy amounts paid to your employees in each of the different pay periods. Here I just have one employee, but if I scroll to the bottom of this report, you can see that there is a new totals figure, and this will allow you to check to see if the figure for total TWSS paid by you to your employees, which appears on your TWSS reconciliation summary, matches the total subsidy figure in the payroll software. If the figures don't match, as I mentioned, a correction may be required and a new submission made to Revenue for that pay period. However, if this figure is correct and one of the other figures on the TWSS reconciliation summary is causing the incorrect reconciliation amount, you will need to contact Revenue through My Inquiries. We have no way of knowing how much subsidy that you actually received from Revenue, just how much you paid to your employees. Next, I'm going to show you this in BrightPay, and the process is very similar. You can check the amount of the subsidy paid to your employees by going to the Employees tab and then Reconciliation CSV file. Here, the dates have defaulted to the entire duration of the scheme, and I'm going to click Continue. And finally, like with the Source Payroll Manager, you can see a summary of all of the subsidy payments made to each employee each pay period. And at the bottom of the screen, you'll see a new totals figure, which you can cross-check with the amount of the subsidy paid to employees on your TWSS reconciliation summary in ROS. As I mentioned earlier, employers have until the 30th of June to accept the reconciliation amounts, and Revenue strongly recommend that employers take the time to read and understand the guidance before accepting the reconciliation. And finally, before we move on from the TWSS, I just have one other important update in relation to employee tax liabilities arising from the TWSS. Previously, it was stated that employers could not pay the liability arising from TWSS on behalf of proprietary directors. However, this has now changed, and it can now be paid, but only where it is being paid for all employees. And the deadline for paying this on behalf of employees has also been extended to the end of September 2021. And I'm going to pass you back to Karen again.
So that's it for the TWSS reconciliation. And now we want to have a quick recap of the existing scheme, the Employment Wage Subsidy Scheme, or the EWSS. The Temporary Wage Subsidy Scheme was replaced by the Employment Wage Subsidy Scheme from the 1st of September. And I think we can all agree that the EWSS is a much simpler scheme to operate and to understand, and it's a lot more intuitive overall. EWSS is a subsidy paid to an employer, not the employees. So it will not show up on a payslip or in my account. This also means that it won't have the same tax implications for the employees as was the case with the TWSS, where many employees faced tax shortfalls at the start of this year. So overall, the EWSS is a much better scheme. The EWSS provides a flat rate subsidy to qualifying employers based on the numbers of paid and eligible employees on the employer's payroll. To be eligible for the scheme, businesses are required to compare financial projections for the period from January to June 2021 to the actual reported turnover for the same period in 2019. Businesses must expect to experience a 30% reduction in turnover or in customer orders between the 1st of January and the 30th of June 2021, compared with the actual reported turnover or customer orders during that same period in 2019, in order to be eligible for the scheme. Employers must continue to review their eligibility status on the last day of every month to ensure they continue to meet the eligibility criteria. As lockdown restrictions ease, it's important to remember that if you no longer qualify, you should deregister for EWSS with effect from the following day, that being the 1st of the month. As you are no longer eligible, the EWSS markers should not be included in payroll submissions to revenue. Now, if circumstances change the following month and you are once again eligible, you can re-register and claim from the date of re-registration. It is not possible to backdate the claim to include the period of deregistration, as that correctly reflected the employer's expectation at that time. Back to you, Rachel.
Thanks, Karen. So under the EWSS, employers receive a flat rate subsidy per employee per week depending on the employee's gross weekly pay. For the first few months of the scheme, the subsidy payable was €203 or €151.50, depending on the employee's gross weekly earnings. However, in October, the subsidy rates increased, ranging between €203 and €350. These revised rates of the subsidy provided by the EWSS will remain in place until the 30th of June 2021. The subsidy is not available for employees whose gross weekly earnings are less than €151.50 or greater than €1,462. As I just mentioned, these rates will remain in place until the end of June, and at the moment, the scheme is due to end on the 30th of June 2021. It's not yet known whether or not the scheme will be extended beyond this date, because at the moment the legislation only allows for the scheme to be in operation until the end of June, and the legislation would need to be amended for the scheme to be extended. That said, the government have confirmed that support won't come to an abrupt end, acknowledging that it would have a very serious negative impact. But at this time, the government have not yet made a decision in relation to the specific rates beyond June. So here I'm joined by Audrey Mooney, who has been dealing with revenue firsthand on the various changes to the wage subsidy schemes. And Paul, I'm not sure if you want to jump in here as well. But Audrey, can you tell me what you expect to happen beyond June? Do you think that the EWSS will be extended beyond the 30th of June? Or perhaps a new scheme could be introduced to take its place? What's your thoughts on the matter?
Thanks, Rachel. Morning, everyone. And Paul, yes, feel free to jump in. So I suppose I think we are surprised that we don't know yet what will happen after June 30th. And I think that our revenue contacts that we talk to regularly would have expected to know by now as well. It is due to end in 6 weeks' time. So, there isn't much time left, and we will have to issue software upgrades, I suppose, no matter what happens.
Yeah, I was just going to say, Audrey, there, I think revenue are in the same position as I think everybody else. They just get informed at the last minute by the Department of Finance. So it's, we have to hope that we will get due notice if there's any software upgrades required. But yeah, they've said, I suppose the government have said there's going to be no cliff edge. Whether that means there'll be some, phasing out, in terms of reduction of the amounts payable, or whether it'll be restricted to certain sectors, we don't know yet.
Yeah, I think they're saying the end of May is really when we can expect to hear more on it. I think we would hope that if there is something, it will be EWSS extended, even with different rates or different criteria. It's a scheme, I suppose, that's straightforward, and we all know it at this stage. So I think that would be the best outcome for everyone. But I guess we just have to wait and see.
Yeah, hopefully we don't have the madness that we had back in March when all these schemes were originally introduced. I mean, that was chaotic for not just for us, but for revenue as well, trying to get their systems in place.
Absolutely.
I think they've learned a lot of lessons from that. So hopefully EWSS version 2.0 will be a little bit easier than the changes that were made to TWSS along the line.
Yeah, 100%.
Great. Thanks, Audrey and Paul. So next is how the EWSS works in payroll software. And where the scheme is being operated, an indicator will be included on the payroll submission to revenue to indicate which employees you wish to claim EWSS for. On receipt of the submission, revenue will calculate the subsidy payable based on the employee's gross pay, the pay frequency, and the insurable weeks. EWSS payments will generally be paid into the designated bank account of the eligible employers within 2 working days after receipt of the payroll submission. There continues to be a 0.5% rate of employer PRSI, which applies for employments that are eligible for the subsidy payment. Employer PRSI must be calculated as normal via the payroll, for example, on PRSI Class A1. Revenue will subsequently calculate the PRSI credit by calculating the difference between the employee's rate reported via the payroll submission and the 0.5% rate. This credit will then show on the statement of account within ROS and reduce the employer's liability to revenue. And finally, I just want to quickly show you how to add or remove that EWSS marker in the payroll software. In Thesaurus Payroll Manager, you can add and remove the EWSS marker for all employees or on an individual basis. To do this individually, access the employee's record within Add and Amend Employees. So first I need to select the employee, and within the revenue details settings, you'll see a tick box here to indicate that you are registered for EWSS and this employee is being claimed for. And so to avail of the EWSS for this employee, simply tick the box, and going forward, the EWSS marker will appear on the PSR to revenue for this employee. Or if you have reviewed your eligibility and determined that you are no longer eligible, it's just a matter of unticking this box, and again click on Update to save the changes. So that's the process for an individual employee, but as I mentioned, this can also be done in bulk. And to add or remove the EWSS marker for all employees simultaneously, go to the EWSS menu and select Start Claiming EWSS for all employees or Stop Claiming EWSS for all employees, depending on your eligibility. And this will add or remove the EWSS marker for all employees on the selected pay frequency. Next, I want to show you this on BrightPay, and to add or remove the EWSS marker, go to the Employees tab, and within the Employees Revenue Details screen, like with the Thesaurus software, simply tick that you wish to claim EWSS subsidy for this employee in this pay period, or untick the box if you want to stop claiming the EWSS subsidy for this employee. And as well as accessing this tick box in the Employees tab, you can also access it from the Payroll screen. Simply click on an employee, and at the right of the screen, click Edit Settings, and you'll find the EWSS tick box here as well. And I'm going to pass you back to Karen.
For the final part of today's webinar, we're going to look at some top tips for managing employees as lockdown ends. As the lockdown restrictions begin to ease and businesses prepare to reopen, employers and HR managers have a busy few months ahead. Between managing the safe return to the workplace, coping with the backlog of annual leave that employees have built up, and implementing vaccine policies, there will be a lot of work involved. So first off, I'll start off with communicating with employees. COVID-19 has been a turning point for many businesses to recognize just how beneficial flexible working can be. Therefore, in the long term, we are likely to see a big shift in the dynamics of the workplace, with many employees favouring to work a hybrid model of some days in the office and some days at home. But regardless of where the employee is not working, regular communication is an essential way to help your teams adjust to the new working environment. Without it, your employees can feel disconnected, morale can dip, and priorities can become confused. With an online employer and employee portal, you can communicate directly with employees at the touch of a button. With our add-on products, Thesaurus Connect and BrightPay Connect, you will find a document upload feature, which ensures company documents are organized and that employees can securely access HR information anytime and anywhere. Sending this important information directly to the employee's phone is so much more powerful than simply sending a company-wide email. Just to note, the click rate of a push notification is 7 times higher than that of an email, And so our Connect products are a great way of communicating with employees when it comes to important updates. Just to explain Connect a little bit more, Connect is an optional add-on that works alongside both BrightPay Payroll and Thesaurus Payroll Manager. Now, your payroll is still processed on the desktop application, but the information is stored online on a secure cloud server. With Connect, you can benefit from automated cloud backups and a secure online portal for employers and employees, which can be used to access payslips, payroll reports, HR documents, and you can also manage employee leave. Now, going back to the employee communications, there are many useful COVID-19 documents that you can send to employees through Connect, including a COVID-19 response plan, detailing what steps you have taken to prevent the spread of COVID-19 in the workplace, a return to work form for employees to self-certify that they do not have COVID-19 symptoms or have not been in close contact with any confirmed or suspected cases over the last 14 days. Maybe you want employees to complete a returning to workplace staff survey to help you identify any concerns that employees feel about coming back to work and potential gaps in your policy that need to be addressed. Information and guidance, for example, the signs and symptoms of COVID-19, guidance on staying at home and self-isolating if you do have symptoms, and information on how to get tested for COVID-19. You can also distribute information regarding the wage subsidy scheme and how it affects the employee, or other policies such as a working from home policy, a return to work policy, and a vaccine policy. Speaking of a vaccine policy, I'm going to look at this in a little bit more detail. Under the Safety, Health and Welfare Act, it is an employer's responsibility to provide a safe working environment for their employees. Therefore, it is not unreasonable for an employer to want to have their workforce vaccinated. However, while individuals have been recommended to receive the COVID-19 vaccine, it is not mandatory in Ireland. While employers cannot enforce their employees to get vaccinated, they can emphasise the importance of the vaccine to their employees, and it would help to return to business as normal. Employers should also provide as much information from reliable sources, such as the HSE website, to educate and inform their employees. An employer may also highlight legitimate circumstances where the vaccine is not recommended. Remember to be mindful and respectful of an employee's right to not avail of the vaccine and plan accordingly by offering alternative work arrangements where appropriate, and avoid any situation which may constitute discrimination, thus leading to legal issues. And also, just to let you know, our sister product, Bright Contracts, now includes a COVID-19 vaccine policy that applies to any business. This policy is in addition to the COVID-19 response plan and temporary working from home policy currently available on Bright Contracts. Back over to you, Rachel.
Thanks, Karen. So the final part that we're going to cover today is managing the annual leave backlog. I think it's fair to say that the majority of employees have been saving their annual leave for when more lockdown restrictions have been lifted. And unfortunately for managers, this means that they will likely be in a situation where many employees will request leave at the same time. In some situations, employers may also have allowed employees to carry over annual leave from last year, which the employee is now entitled to on top of their normal leave entitlements. Where possible, managers should allow the leave. However, they also need to ensure business continuity. Therefore, it is important to balance the employee's request about the timing of the leave against the needs of the business. While it might not be possible to please everyone and give them their requested time off, it is important that you deal with annual leave requests in a way that is transparent and fair. To avoid the build-up of leave that employees will want to take when they are back at work, employers can require employees to take annual leave on dates chosen by the employer, provided that the required notice is given. However, it's recommended not to force employees to take all their annual leave entitlement, as the company must take into consideration the employee's health and well-being. By introducing Connect, employees can access a self-service smartphone and tablet app, and this is where they will be able to request leave anywhere, anytime, meaning they don't need to be in the workplace to request leave. Employees would also be able to view a payslip library, access HR documents, and view their annual leave calendar without needing to contact HR. Where an employee requests leave, you will get a notification to log in to your online portal to approve or reject the leave. And the most popular policy of granting annual leave is on a first-come, first-served basis. And with Connect, you can ensure that this fair method of approving leave is implemented, as you will be able to see the order in which requests come in. You can also access a company-wide calendar displaying who is on leave and when, so that you can ensure adequate staffing levels before approving the leave request. So here you can see there's 4 employees on leave on this particular day. Going back to the dashboard again, I just want to point out that HR managers should not be the only people involved in the leave management process. You should also involve the likes of department heads and line managers, or even team leads, to relieve you of the admin burden. By delegating the responsibility among department managers, you can free up time to spend on other important HR tasks, such as introducing a vaccine policy. Department managers are likely to have a much better understanding of their project timelines and deadlines than the HR department. So by allowing these managers to have control over the leave requests, they can better manage their team's schedule and workload. With BrightPay Connect and Thesaurus Connect, you can set up unlimited users, each with their own user permissions. So for example, department managers can be set up so that they can only view employees within their department, and you can also limit their access so that they can only view the leave calendar and approve employee requests without having access to the payroll information or HR documents. One last tab that I want to point out here is the documents. And as Karen mentioned, with Connect, you can upload any type of document and resource that you want to distribute to your employees. So for example, that vaccine policy, or even the likes of a company handbook or a contract of employment. And you can send notifications to employees and monitor the date and timestamp of who accessed the resource or document and when. So it's a great way to communicate with your employees, but also protect you as an employer. So I'm going to finish up there with the sales plug. But if you do want to find out more, we do run online demos of both the payroll software and the Connect add-on on a daily basis. So please let us know if you want to book onto one of our free demos. So that brings us to the end of the presentation today. We've covered a lot on today's webinar, but we will send everyone an email later today, and this will include a copy of the slides and a link to the recording of today's webinar. So it's now time for the questions and answers, and if you have any questions, feel free to type them into the questions box, and we will try to get through as many questions as possible. As I mentioned, however, we have a lot of attendees logged on to today, so unfortunately we won't have a chance to answer every single question. And I see a lot of questions have come in already. For our questions and answers today, we have Paul Byrne, who is the Managing Director here at Thesaurus Software, and Audrey Mooney, who is our Customer Support Manager. And we also have Laura Murphy in the background too, for if there are any employment law questions. And Laura is our Chief HR Officer. So Audrey, you've been keeping an eye on the questions as they've been coming in, so I'll pass it over to you to look after the questions.
Thanks, Rachel. Yeah, a lot of questions, so we'll try and I suppose not have duplicates. So we'll just get started there. So the first question there is, why are we getting letters even though we have already paid the overpaid amount?
Audrey, I think that would be probably because they didn't hit the accept reconciliation button. What do you reckon?
Yes, I think so. I think you have to, accept it or it'll be deemed to be accepted, so it's not final until that step has been done, I guess. Yeah.
Now, having said that, when we reach the 30th of June, I think revenue will deem it to be final.
Absolutely. Yeah. For those that are owed or owe nothing or owe money, it'll be deemed for everybody that hasn't accepted. Yeah.
Yeah.
Okay, so the next question there is, I do not agree with the revenue report and have sent in an extra CSV report, but I've not heard anything back.
I think that would be a case you'd really need to get onto my inquiries for that one, because really when you send in the CSV report, it should in real time basically update the amounts that revenue have calculated as being owed or repayable.
Absolutely, yeah, that reconciliation summary should update straight away.
Yeah.
So
I think unfortunately it's a question of getting onto revenue in that case.
Perfect. So again, another question, just the TWIS reconciliation states that revenue owe the employer money, but they have already refunded them. Should they accept the reconciliation? So I think across the board, reconciliations need to be accepted.
Absolutely, and there seems to be an awful lot of employers out there that don't owe anything to revenue or within that 500 sort of limit. And because they haven't accepted the reconciliation, revenue still believe that there's action outstanding, and if that continues until after the 30th of June, assessments will probably issue or whatever.
Yep, perfect. Question there, my tax credits are not coming up on my payroll even though they have come off the PUP. So I don't know if this is
it's a common problem really, isn't it, Audrey, that there's a week or two.
It takes really 2 weeks for credits, etc., to return to normal, just because of the way the PUP week runs and the fact that it's paid in arrears. So you could have 2 weeks of payroll with no credits there when employees return.
Yeah, it's unfortunate that it worked out that way, because a lot of employees are getting hit fairly hard in the first 2 weeks. Yeah. But it does rectify itself after that.
It does, and I think Revenue's argument is that they get PUP for that week that they return as well. Yeah. So. Okay, the next question there is, I just want to ask, where do I pay the amount due from the reconciliation?
Now, you can correct me if I'm wrong here, Audrey. As far as I'm aware, that would be something that revenue will put in place after the 30th of June. Now, there's probably a facility to pay it in the meantime anyway, but it's not actually due until after the 30th of June. Do you have any other thoughts on that?
Yeah, no, that question came in a few times during the webinar as well. So yeah, it's kind of, reconciliation is open until the 30th of June and liability due to be paid then on or after the 30th of June. So. The next question there is, can you receive the EWaste if returning to work on reduced hours?
Well, absolutely. I mean, it's as long as you're sort of over the 151 euro 50 is the lower limit. As long as your weekly pay amounts to at least that, you will be entitled to EWaste, as long as the employer themselves also qualifies for EWaste.
Yeah, I mean, there's nothing to say that employees have to work at all, so they could have been on EWaste when they weren't working at all. So.
Yeah.
The next question there is, will revenue give taxpayers the option to spread the repayment of TWiS over a period?
I suppose this comes down to whether somebody wants to use a debt warehousing, and also revenue are looking at a phased payment arrangement that they're going to put in place, hopefully for these liabilities as well.
Yeah, Perfect. Question there, would employers have to pay back any money if they are claiming the EWaste? So I suppose once they qualify.
Yeah. I mean, I suppose it would only come up, the repayment might be due if it was discovered that they didn't actually qualify. Now I know this is sometimes based on, projections and reasonable estimates, etc. And as long as they're fair and reasonable, I don't think revenue would be, they're taking a fairly pragmatic attitude with all of this. But I mean, if somebody would definitely, should have known they didn't qualify, well, then it could be a case that in a review situation, they might be asked to refund.
Yeah, perfect. A question there, in general, has revenue given any indication of the percentage of employers who are covering the tax owed by employees for TWiS? So I think, to be honest with you, they'd have no way of knowing, because the employer can just give the money directly to the employee and then the employee would be paying it. So I don't know. I don't know how they could see that. Paul, I don't know if you have anything to add.
No, absolutely not. I mean, it's that they wouldn't know, and I guess it's also a very generous thing for the employer to be doing in these occasions. And if the employer is in a position to do it, there's another thing. A lot of employers will be under pressure.
Yeah. The next question there is, the employer refund scheme was in operation for 2 weeks prior to the temporary wage subsidy scheme. Was the treatment in Thesaurus the same for both schemes? Was there any code to distinguish the two schemes?
Well, effectively, there was no difference really, apart from I think probably the description might have been different, Audrey, was it?
Yeah, but I suppose I think the initial TWiS had a different description as well, because we were a little bit into TWiS when revenue gave us the description that they would like. So it changed throughout TWiS. So no real distinction, I don't think, bar the value really might be the indicator, because that was the flat 203.
Yeah, actually, I suppose does the CSV file that is returned, that include those initial 2 weeks? And if it does, I guess revenue are just basically ignoring it anyway.
Okay. The next question there is, in regards to tax due by employees re-TWiS, do they have to manually accept their statements, or will they be will they automatically have the payments taken by adjustment to their tax credits from 22 to 26? Thanks. So I think my understanding is, Paul, if they do nothing, the revenue default will be to reduce the credits. So it's, I suppose, important to do something if that's not what you want to happen. Would you agree with that?
Yeah, indeed. And the 4 years will be from 2022 to 22 to 25.
25,
inclusive, yeah.
I know it sounds strange talking about 2025, 2026, but we know how the years fly in payroll and all of that. Okay, the next question is, if some employees do not avail of the exemption from BIK that is offered from employers to refund tax shortfalls, does that mean that all employees are to lose the exemption? I suppose I would wonder why an employee wouldn't want this if it was being offered to them. I don't know, would you feel the same, Paul? Why somebody would say no?
I don't know how you could not avail of the exemption. I thought that was kind of automatic.
Yes, I'm kind of reading it that somebody doesn't want it to be paid for them, but I would struggle to understand why they don't want it to be paid for them. But I suppose it wouldn't affect you paying it for other employees, but it would affect the proprietary director, isn't that right, Paul? Because it would mean that you hadn't then paid it for all employees. But maybe if you'd offered, I don't know, Paul, does that count?
Oh goodness, yeah, that's a slight twist on that. Yeah. Well, I can't actually see why anybody would not want their tax bill paid.
Yeah, so, I can't see either. Yeah,
it's particularly if they're not being taxed on that effective benefit that they're receiving. Yeah,
It's free money. Yeah, so just a couple of other questions just about when the balance needs to be paid. So I mean, we've covered that. The next question there is, TWiS upload data from October 2020 differs from data from recent TWiS reconciliation. October data starts from week 12 and is correct. Recent TWiS reconciliation starts from week 13. Makes no difference to the overall amount due to revenue. Does this need to be corrected?
I don't think so in that case, because I think, again, that might be down to the original employer refund scheme, do you reckon, Audrey?
Yeah, I think if it doesn't make any difference, if they're happy everything is correct, I would just leave it, I think, yeah.
Yeah, I mean, there's obviously no recalculations or calculations required in relation to that initial 2 week period. It was a flat rate. So it doesn't, there wouldn't be anything repayable or refundable or payable in that case.
Yeah. The next question there is correcting J9 for TWIS for employees not eligible for it in 2020. How can you do that in Thesaurus? So I suppose this is where the payslips were ineligible. So there is a specific correction type on Thesaurus 2020 for that. So under the corrections menu, you'll see TWIS reversal. So if you're happy that's what's required, then you can use that correction. Okay, the next question. On the reconciliation screen, when the three figures are different, I totally understand the 410 v what should have been paid, but what about where the employer paid more than the subsidy to the employee? Does this matter for the revenue reconciliation, and the extra subsidy paid to the employee just becomes a matter for the employee's own tax return?
Sorry, I'm just reading that myself.
I think this is going down to tapering, Paul, isn't it? If they paid more than they were allowed?
It could trigger the tapering, all right, yeah.
Meaning revenue would give you less than what you would have got had you paid just the subsidy.
Yeah. No, you're right. It's a tapering issue. Unfortunately, the tapering in some cases can basically do away with the subsidy, and also the ability to use J9.
Yeah, for every euro over, you lost €1 of the subsidy, wasn't that it? It seems like a long time ago now, but yeah.
Somebody else described it as like a snake eating its own tail.
Okay, the next question there is, if you are due a refund on the TWIS reconciliation and it's under €500, will they still refund?
I believe so, yeah. It's only in relation to amounts paid, payable. They're doing the 500 concession.
The next question there is, on the TWIS screen, the button to accept reconciliation isn't there. I have downloaded it and gone through it. How do I get to the accept stage? We have a manual payroll.
I'm just wondering, is a manual payroll, is that something that they're doing on Ross Online, or?
I would think so.
Yeah.
I think it sounds like the subsidy data might be missing. That it hasn't been reported.
Yeah, I'm not 100% sure, like whether if you're using just Ross Online, whether you would also need to do a CSV file, or would, does the Ross Online have that the ability to record the subsidy amount as you went along? But yeah, as you say, it did.
Yeah.
It did it?
Yeah,
okay.
It did have it, I think, yeah, but it sounds like perhaps it wasn't entered. So if it wasn't entered at the time, then I suppose it should be entered now, and then I think that should be available then.
Yeah.
Okay. The next question there is, can agents do the TWIS reconciliation for their clients?
As far as we're aware, if you're registered to operate PAYE as a PAYE agent for those clients, as far as we understand, you should be able to do the reconciliation as well. You should be in a position to accept, the reconciliation or to submit subsidy CSV files.
The next question there is, if the subsidy has not been allowed by revenue because previous payslip not in time window, so that's the reason given by revenue, should I change the pay date and resubmit a new PSR? So I suppose that message, Paul, refers to the January and February payslips. It means there's no valid January, February payslip identified for that employee's, PPSN and employment ID. So it's not about the actual subsidy payslip. It's the Jan and Feb.
This is Jan, Feb 2020.
So I suppose if you feel that there shouldn't be an issue, then I think the only thing to do is to raise it with revenue via my inquiries.
Yeah, it looks like they don't have the information really to calculate the subsidy. Then in that case, would that be the case?
Yeah, or it could have been, I suppose, that they were amended after the submission date. We've had all these, the corrections.
Yes, you're right. Yeah.
But it's probably best to raise it with revenue.
Oh, listen, we'll all be glad when all this TWSS is finished and put to bed.
Yeah, take a month off. Okay, the next question there is, if an employer wishes to avail of debt warehousing for the repayment of TWIS, do they need to contact revenue to inform them of this?
Yeah, as far as I'm aware, if you're already availing of debt warehousing, I think they will automatically apply the subsidy shortfall or the TWSS reconciliation amount to the warehousing as well. If you're not signed up for the warehousing, you do need to actually register with revenue for that. And I've sent a link to anybody who's asked about debt warehousing, the instructions on debt warehousing itself.
Okay, thank you. The next question there is, at the start of lockdown, one employee initially elected to receive PUP. Initial advice from revenue was to make the employee a leaver, which I did. 4 weeks later, he asked to be put back on payroll as he was entitled to more under the operational phase. I put him back on the payroll on a new payroll reference, which is what should happen. From TWIS reconciliation, I can now see that I haven't received any subsidy for this employee, as his start date meant he wasn't eligible. I've raised a query with revenue through my inquiries and was told that my comments have been noted. Can you advise anything else I should do? So I suppose this surprises me, Paul, because, rehired staff or rehired employees, did qualify for the scheme.
Yes.
But I suppose they had to be included in a submission between the 1st of February 2020 and the 15th of March 2020 under the same PPSN. So, unless that isn't the case, but I suppose if you feel that is the case, well, then I would definitely argue it with revenue because, rehiring staff was all part of that scheme.
Yeah, yeah.
The next question there is, how do you find the TWIS report in Thesaurus? So I suppose it's just, if you open up Thesaurus 2020 and under the reports menu, you'll see TWIS report. I think it's the last option there. The next question is, are accountants charging clients for this reconciliation generally from your own experience?
I think they are in most cases because there can be quite a bit of work involved. It gets quite tricky sort of drilling down into individual pay periods and individual pay slips. So there is a bit of time involved, or there can be a bit of time involved. We know that from our own support experience here, that it can take quite a time to actually pin down the issues and to produce whatever corrections are needed. So yeah, no, look, your time is very valuable, and I think it's the client would probably be quite appreciative of getting it reconciled anyway. So yeah, I think you'd be fair enough to charge.
Perfect. Somebody's just saying that they don't have the TWIS option under the reports menu, but I can see by the version they've told me they're using that they're on 2021. So I suppose just to emphasize, you do need to do this in your 2020 payroll. The next question there is, if the employer pays the tax due for the employee, is it treated as BIK or extra salary? So I suppose it's not treated as either. You can pay that for the employee and it's not subject to BIK. It's, there's an exemption.
Yeah, and if you want to record it in the payroll, you just put it in as a non-taxable addition amount.
Yeah, at least you can run a report on that then afterwards if you ever wanted to.
Yeah.
Okay, the next question there is, in revenue TWIS reconciliation, where subsidy paid is lower than subsidy payable, reconciliation is equal to paid, but where subsidy paid is higher than subsidy payable, reconciliation is equal to payable. It seems that revenue is only taken into account money that were overpaid to employers and reconciling TWIS to their benefit. If you could clarify this, please, it would be very helpful.
Yeah, but it is correct. I suppose revenue won't, allow you, if they paid you, sorry, I want to get my wording right here. It'll only be the amount that was paid, if that's a lower amount, that they will actually allow you, because obviously if you haven't given the money to the employee, they're not going to provide the subsidy for that. It's different with EWaste. EWaste, like, you're getting a subsidy as an employer, and you can still pay a lower amount than the EWaste grant you're receiving. But with TWiz, they definitely wanted to only give you at least what you were paying, or sorry, I should say the most what you were paying the actual employee. I don't know whether I'm confused myself or confused everybody with that answer, but have you anything to add to that, Audrey?
No, I think that's fine.
Okay.
Yeah, I mean, there were very strict conditions, I suppose, you weren't allowed to pay less and you weren't really allowed to pay more, so yeah, it was a much different scheme. Somebody's just asking there, what action is required in Thesaurus and revenue if you need to remove your company from EWiz? So I suppose from a revenue point of view, you need to go in and deregister, and from a software point of view, then you should untick the EWaste indicator for all employees, and I think Rachel showed how you can do that in bulk for all.
Yeah, and I think if you deregister with revenue and forget to remove the marker within SOARs, you will receive warnings when you actually submit the PSR, but you won't receive the EWaste anyway.
Yeah, yeah. Will it reject the submission, Paul?
I'm not 100% sure whether it rejects or gives you warnings. You're possibly right. It probably could be a rejection.
Yeah, I think it might be a rejection. I just can't think of the error number, but I think it will reject the entire submission if there's EWaste and you're not registered.
Okay.
Or no longer registered. Yeah. The next question there is, if an employer agrees to pay the employee's liability of TWIS, where or how can the amount of liability be determined? For example, where can the amount due be verified?
Yeah, it's a tricky one because you know, the employee could have other sources of income. The spouse could enter into under joint assessment. So it's difficult to know exactly in those cases how much is related to the TWiS or even PUP. So I think the only thing you can do really is do a calculation based on their actual marginal rate of tax and USC. And I think that would be fair enough to do that and to keep a record of that, you know, if revenue come looking for it. But that's what I would do in those cases. I would work out, like, if they're not on a just standard 20% and say, you know, whatever the USC rate is, just apply those to the actual amount of the TWiS, and that's the amount I would pay.
Yeah, I think revenue advising, yeah, just a best estimate, aren't they?
Yeah.
The next question there is, one of our employees are working from their hometown in France and has a tax exclusion order in place, but now it appears we cannot claim EWaste. Is this an error or not something that Thesaurus would pick up on? Do I need to do something in the software? So I suppose, I don't know, Paul, if you know the answer to this. I don't, but I suppose it would surprise me because employees on an exclusion order were eligible for TWiS. I don't recall it coming up in our revenue, you know, on our revenue calls in relation to EWaste. Do you remember anything?
No, I don't actually. I'd have to check that one out. Yeah.
Yeah, and I suppose if you want us to follow up on that, I mean, maybe just send an email into support@thesaurus.ie. Maybe just put it for my attention, and we can certainly ask our revenue contacts. But you know, certainly exclusion order employees did qualify for TWiS or TWiS. Sorry. Okay, the next question there is in relation to EWaste. Client operates from 2 different shops. Does 30% reduction apply individually to each shop or to overall turnover for the business?
Yeah, I think I actually sent the guidance on for actually, if I didn't, I will. I'll actually include it to everybody for the actual the rules of EWaste. They do include a good section and appendices on, you know, where people have individual business units, where they are distinctly separate. The shop, say in this case, that it has, you know, suffered the reduction of 30% or more would qualify for EWaste, or the employees there would qualify. But I'll send on the or include in the notes that go out later with the recording the rules on that. But I do believe that should be fine.
Perfect, thank you, Paul. The next question there is, I'm running payroll this week for a hairdresser that returned to work last week. They only set up the company last December and traded for 5 weeks before being locked down. Just confirming that they are entitled to claim EWaste now, as they are definitely 30% reduced from projected income for Jan to June 2021.
Yeah, it's I suppose similar questions as the previous one. Employer eligibility. I mean, if a hairdresser doesn't qualify for EWS, I don't know who would. But, you know, yeah, I'd look. It should be fine, and because the guidance does mention projections, and obviously if you're doing projections when you were opening the business in the first place, they would have been a lot higher than, you know, what has actually happened. So yeah, there's absolutely no issues there as far as I'm aware.
Okay. Another eligibility one, Paul. Hi folks, what happens if you did your eligibility check on the 30th of November 2020 based on expectations or orders to hand, and based on those the company passed the eligibility test of 30% reduction from July to December? So they remained on EWaste for December 2020. However, on the last week in December, there was a surge of order sales, which effectively brought them over the 30% reduction criteria. As the client could not have predicted the surge, what happens to the subsidies already claimed to the end of December? As the company was locked down again for January, they continued on EWaste for January 2021 and did not deregister. Is this okay?
Again, as far as I'm aware, that's fine, because they would have done the exercise. It's a month-by-month exercise that would be performed. So at the beginning of December, you would have worked out that yes, on the basis of projections for December, reasonable projections, you're going to be under the 30% or whatever. If it so happened that during the month of December, you had a surge, as they did in this particular case, it doesn't affect your eligibility for December itself. It would affect your eligibility when you go to do the review at the end of December for periods after that. So, then is when you would be deregistering or not claiming the EWaste. But, you wouldn't be expected to make an adjustment mid-month unless it's something that you should have been aware of at the beginning of the month,